So let's go inside out on Nvidia. Joining us now is Dave Altavilla, Principal Analyst at Hot Tech Vision and Analysis. Very good morning to you. Thanks so much for joining us on this very important day for Nvidia. What are your expectations here?
Good morning, and thanks for having me. I think a lot of folks are waiting on pins and needles for this earnings call today, this afternoon, and for good reason. I expect Nvidia is going to put up another beat and a raise, firmly so, I might add. We still have to remember that demand still far outstrips supply when it comes to the AI data center, and the reason for that is the AI data center is we're not only expanding compute capacity, but we're expanding and changing the workload on it. And so it's fundamentally changed. It used to be that the cloud data center was serving web pages or maybe software as a service, apps, to now an AI-centric workload where AI is everywhere, in your phone, in your laptop, in your car, aerospace and defense, you name it, life sciences. And so the workload's fundamentally changed, so we're retooling the data center as well, and Nvidia is still shipping every GPU that isn't nailed down. The supply still outstrips demand by far.
Yeah, absolutely. I mean, the thinking out there is that we want to continue to hear whether this is sold out, or at least that the supply is unable to meet just the amount of demand we're seeing out there. What are you expecting to hear as far as the margins and the moat, as far as any sort of signs of degradation there with regards to the competition, particularly from the likes of AMD, for instance?
Right, good. Interesting observation there, Sam, for sure. I think the margin expansion is going to continue. What's happening right now is Nvidia is shipping their new Blackwell Ultra GPU architecture. As a matter of fact, the company went on record the other day to say that Blackwell Ultra and the co-optimized rack of the product is some 10x more performance per dollar, performance per watt, versus its previous gen Hopper architecture in mixture of experts AI models, which is a new, more efficient AI model that's at play these days. And so big, bold claims. I think Blackwell Ultra is going to contribute significantly to their earnings today. So we'll hear more about that, I hope. But I think also the moat is pretty strong in that, again, we're talking about a market expansion story here. AMD is coming on strong now with their acquisition of ZT Systems. They had a financial analyst day last week in New York, and they talked about how their current AI data center CAGR is about 52%, and they expect that to expand to 60% in the next 3 to 5 years based on demand for their MI300 and 400 series GPUs, hyperscalers like Oracle latching onto that. But I think really this is, again, a market expansion story. And so AMD is coming in to mop up some of what perhaps NVIDIA can't deliver on from a demand standpoint. And so I think they're both going to enjoy some substantial growth.
Do we care about China, this earnings report?
No, that's an interesting question. I don't think we do. I think that's already baked in. NVIDIA CEO Jensen Huang has said that their market share over there has gone down dramatically. I think, again, because demand here in the U.S. and in other regions is so strong that it won't have a material impact this quarter on NVIDIA's numbers. I think a beat and a raise is in order, and it's because they're the big dog, the only game in town currently with Blackwell Ultra.
All right. Thank you so much for joining us today and giving us a little bit of a preview ahead of what is described as the Super Bowl of earnings with NVIDIA's report card. Thank you so much for joining me, Dave, analyst at Hot Tech Vision and Analysis. Appreciate it. Let's trade it now with Tom White, host of Fast Market. Example trade for NVIDIA today, Tom.
Yeah, the option market pretty elevated right now as far as implied volatility levels. Pricing in about a plus or minus 6.5% move in the shares, just over $12 either way. So in the near term, options that expire this Friday, we've got some elevated volatility levels in there. So I looked at a strategy that takes advantage of that higher implied volatility in the near term. I looked at a bullish call diagonal here. If you think the stock's going to go higher, this takes advantage of it, and you get pretty good risk levels based on those IV levels. So going out to the November 28th weekly options, expires in 9 days. We're going to buy the basically at the money 187.5 strike call. And then against that, we're going to sell in the near term November 21st monthly options that expire in just 2 days. We're going to sell the 200 strike call. So there's that $12.5 wide call diagonal and about what the one standard deviation move is pricing in there. You're going to pay roughly about, I've got a 580 debit on there. The stock was trading above 187 when I priced this out. It's trading closer to 186, so the price on this is probably down to 540 or so. But the debit you pay on this type of strategy is going to be your risk. So if you pay 580, 580 bucks. Now, anything above about the 190 level is going to be profitability on this one. And the key here is you're taking a bullish stance, but you're buying a really low implied volatility of about 70% in the November 28th options, selling about 116% in the near-term options. That lowers the input price, but definitely a bullish trade where you need about 1.5% move to the upside to get above that break even.
Okay, Nvidia trading at 185 and change right now, up at 2.5% ahead of its key earnings report. Thank you so much, as always. Tom White, I'll catch you later. Thanks for joining us here on Morning Trade Live.